Hello, hope you're doing good. I'm going to try and share with you so far what I've learned and some of the tips that I've gathered over the time. So first things first, I'm going to be taking you through my chart layout. As you can see, I don't have any indicators because I relatively find them very lagging to use. And you can also see that my colors have changed. You know, the usual candles are always green and red, but I opted to use the gray and lime because they don't creep my anxiety up. They always make me comfortable while I'm trading the charts. So as you can see, that is my setup. Generally, that is what I use to analyze. Simple. It is not that complicated. So on the top ribbon, starting from the top left, we have the symbols. That is where you can add symbols. And then we have new order if you want to place an order in the market. Then we have chart scroll to the right and then chart scroll to the left. Under my drawing tools, we have a vertical line, we have a horizontal line, we have a diagonal line, we have also text, we have a rectangle tool, and also have the arrowed line, which helps us set the trend, just in case you might forget to know where the trend is. Under arrows, we have a thumbs up, thumbs down, arrow up, arrow down, stop sign, check sign, left price label, and so on. Under time frames, we have a minute 1, of course, minute 5, and then 15 minutes, and then 30 minutes. We have H1, H4, daily, weekly, and monthly. So that is it to the charts. And one thing to note that I'm using the standard chart from MetaQuartz. The reason being is that different brokers tend to alter the price. Then you find for instance, you see this candle here, this bearish candle. You might find another broker is showing that candle has a huge tail, but in actual sense, when in real markets, remember MetaTrader, they don't manipulate their charts. They use standard charts worldwide. So I opted to use a MetaTrader demo chart to analyze, just in case to eliminate if there is any manipulation by the broker. I'm going to break down my system into 3 categories, which we all know that is the analysis phase, entry, and then management. Of these 3, it is the analysis phase that will take most of your time, because entry is just a one-time thing, and also management is just, you just check maybe once in an hour or once in 4 hours. So during the analysis phase, how my system works is that I usually want to work with trends or working with ranges. For instance, we have a chart in front of us, and this is a monthly chart, GBP card on a monthly time frame. I'm going to draw some lines very quick using the arrows to indicate our overall direction, or our overall direction of the market. So let me just put them straight in. So those are what we are looking at. After establishing our trend, we can see that trend is going to the upside. Even without indicators, we can still do a very good analysis. However, some of the institutional traders tend to say that you need a supplement of indicators to a certain degree, like to assert your confidence in the markets. But I personally tend to always want to use a chart that is very clean. So this chart is showing us that it is bullish on the monthly time frame. After we have established our bias for the coming month, which is bearish for the following month, as I have explained that since the previous month closed bearish, and it closed bearish in a resistance zone, that is our line up. So that means the following month I'm expecting sales only. So that is where I employ one of the key components in my analysis, where I use a top-down analysis, which is a use of multiple time frames. We have started with the monthly, and we have determined that the monthly closed bearish. That means most probably even the next month is going to continue the bearish movement. Since price has to go back to support before going back up, That is where we derived our our bias for the downside. We are going to use different time frames to pin our entry. That is the weekly, daily, and then H4. The way I use this is that when the monthly closes bearish, I would want to see what was the last week of that month. Did it close bearish also, or did it close bullish? So if it closes bearish, we mark out that bearish candle. We mark its high and then we mark its low, so that when the following week opens, we are also expecting that following week to continue bearish in support of our higher time frame analysis or our monthly bias. When the monthly is going bearish, that means there is that first candle on the weekly time frame that closed bearish, and then there is also that first candle on the daily time frame that also closed bearish. And even under the daily time frame, after the daily time frame, we go to the H4 time frame. That is where our entries are going to be situated. Why? Under the daily time frame, this is where we can recognize the different sessions that are opening. London, New York, and then we want to enter with momentum. We want to enter when other traders are also executing their trades. So that is basically how my strategy works. The candles from the higher time frame to H4, they all have to line up in the same line. In that, if monthly is bearish, we want to see the weekly also bearish. We want to also see the daily closing bearish, and then we want to look for our entries on the H4. Though randomly, but it has still been moving. You can see all these points. So right here, this is known as a consolidation phase. Right here, this is a consolidation phase. Price did not actually move in a trend. It was just stuck in one position. So we can clearly see there was a push from the upside to the downside here, from where we have formed this sort of consolidation, and then we are seeing sort of a bullish run. So let's go ahead and first clear those instruments we are using. So when you're analyzing, you want to use the most previous price action. In this case, we are going to only be using this section right here. It is the only section we are interested in. You shouldn't involve this, because this is price from long time ago. This is price from 2018. We are in 2024. Come on, even COVID has ended. So let's go ahead and just use this zone right here. So in that zone, we can see there is a clear uptrend. We can see that is our resistance. We can also see this is our support. Remember, price moves from support to resistance and from resistance to support. And if it is consolidating, it is the same process. So after marking our trend, we know at one point price has to move, as it has moved from here. It came back there, it came back to support, it went up to there, our resistance. So at position 4, that is where our candle closed bearish of the previous month. And I told you, when this month opens, we are expecting it to move to support the zone, which is right here. We are expecting it to move to support. So after determining our bias, we are going to mark using the vertical line tool. We are going to get our vertical line tool and then actually mark the last month. We want to mark the last day of that last month. So we put our line on the last month, and then we go under properties. And doing this, I would advise you, if possible, to use a laptop, because a phone won't give you all these options. Yeah, they are there, but it is a lot of hassle. Remember, it is not straightforward to use. You have to first go back in settings and then remove your chart, and then it becomes confusing and stressful. So after properties, we come to parameters, and here we are going to select the last day of the previous month, in this case, which is the 31st. So, and then we press OK. So this line has been placed on the very last day of the previous month. So from there, that is where our analysis starts from. Previous month closed bearish. We are expecting the coming month, which is this month, to continue being bearish. So after establishing our end of the previous month, we want to see if prices to continue down in the following month. We want to see a bearish weekly candle. Yes, we want to see a bearish weekly candle. If price in the previous month closed with a bullish last week candle, that will be a sort of confusing signals, because if prices continue down, we only want to see that bearish momentum going to the downside. So we are going to step down using multiple time frame analysis. We are going to go to week 1. So week 1, we can see that the last week of the previous month closed bullish. So if the last week of previous month closed bullish, that is okay. There is no pressure. So we want to wait until we see a bearish candle forming after that week. In this case, we have seen this candle right here. You can see that candle right there. That is our bearish weekly candle. After that candle forms, we are now narrowing down our entry. So we are going to advance our vertical line to that week and make sure that we put that line on the very last day of that bearish week. So in this case, I'm just going to go to properties, and then under parameters, I change it from, remember this is our week, the bearish week, and then put that line on 8th, which was the Friday of that week. So we have now put our line, vertical line, to the very last day of that bearish candle, which is in support of our bullish, bearish sentiment to the downside. So after seeing a bearish weekly candle close bearish, we are going to further go down to the daily time frame. And in the daily time frame, we want to see on the last day of that week, did the price close bearish or did it close bullish? So let's go ahead and go to the daily time frame. So this line is situated at the end at the last day of that week. So we can see the last day of that bearish week, it also closed bearish. Remember, monthly we are bearish, and then we waited for a bearish weekly candle and we got it, and then we marked it. So now we are going to wait for, in fact, we are going to look out for a bearish daily candle, which we have got right here. Since that week closed bearish, and also the last day of that bearish candle closed bearish, we are going to mark out that day. So I'm just going to move out this vertical line, one candle back, and then I'm going to get my horizontal tool and mark its high, that is its high, and then I'm going to mark its low. So after marking the high and the low, I'm just going to go ahead and move this vertical line to that bearish day that has closed bearish. Remember, on the monthly we are bearish, and then we are waiting for a bearish weekly candle, and then after the weekly candle closing bearish, we are also waiting for a bearish daily candle after the week has closed. So let me just go ahead and put this line just on the last hour of that same day. So this is going to be 23:59. Oh, sorry, it's 23 50 59. Yeah, that's 59. So after declaring that also the day has closed bearish, so now in the coming day we are going to be looking for our entries on the H4 time frame. Under that form of entry, there are a few key points that I'm going to point out, which are going to be built on the marked high and low of that bearish daily candle. So let's go to the H4 time frame. As you can see, this right here is our high of the bearish daily candle, and this down here is our low of the bearish daily candle. So as I told you that this line here is at the very last hour of that bearish daily candle. So after the day has closed, remember at night there is no much action and there is even no momentum, as you can witness on the candles that followed after the close of the day. In fact, the start of the new day. So when the new day starts and we're on H4 time frame looking for entries, we are going to be looking at a key point that we want to enter the markets when other big institutions or other traders are entering. That means we are supposed to enter the market when the London session opens, because here in Uganda it is the London session that opens first, then New York session opens last. And technically those are the two sessions that you are supposed to like focus on, because Japanese that JPY session tends to open at night, because we are in a different time zone, as you know. So, and people are always sleeping. So that session has no much momentum, since most of the traders are on the east side. That means that Europe, Eastern Europe, and then Western Europe, and then also the American side. So on the H4 time frame, what we are going to look for on the opening of the new day is that we want to see a candle closing bearish, since we are bearish sentimented, say from the monthly, because month has given us a bearish sign, weekly has given us a bearish candle, daily has given us a bearish candle, of which you have marked its low and its high. So we are going to wait for the candle that opens at 8, most probably. Most times they do change the times, but it normally opens at 8. This is the candle we are interested in. The reason being that London session opens in between this candle, so it opens at around 11. So this candle opened at around, let me first change here a little bit. It opened at around 8, so that means at 11 it is still going to be open. Remember, it is a H4 candle. It consists of 4 H1 candles. So that is the candle we are interested in, and to make it clear of the candle I'm saying, it is that candle right there. As you can see, yeah, it opened at 8. So we want to see where are the big institutions looking to send their trades at. So by looking at this candle, it has closed bearish. So this one gives us like a confirmation that price is going to continue to the downside. So what I will do is I will get an arrow and put it right there, because that is our selling point. So if this is our selling point, we are going to move this low of the other daily candle and then just put it to our entry point. That indicates where we have entered from. And then remember, this up here is our high of the bearish daily candle. So we are going to get a stop loss, and we are going to put it just above that line. Let me use a stop sign just above there. So that is the point where we are going to put our stop loss, and then we are going to actually move this horizontal line to the point where we are going to put our stop loss. So let's first see how many points we are going to risk on this trade. It is 877. So from that 877 points, you can easily calculate how much lot size are you going to enter the market with. Remember, we are supposed to risk only 1% to 2%, maximally 2%, because if you risk beyond 2%, you'll be setting up yourself for failure. So after determining that it is 877, depending on your account size, you can calculate how much lot size you are going to enter with on this trade. So you might be having a question that how do I know where to exit from, or how do I know where to possibly target? I'm going to run you back quickly to the weekly time frame where we had drawn in these some of these you can see this support line and also this resistance line. So those are the lines we are going to be targeting. Since price had showed us that it moved from here to here to here and to here, so price has come back here, and then we are expecting price to come back in this zone down here. Let me first clear it. Yeah, there we are expecting price to come back to this zone down here. So that's where we are going to put our targets at. Since price moves from resistance to support and from support to resistance, that will be a very good zone to put our target profit or our take profit. So if we go back on the daily time frame, we can see up here, this is our entry, and we have reached 877 as we had measured of late. And if we target this rectangle here, which we have drawn in on the weekly time frame, that means we are going to be targeting 5,200 points. So 5,200 points, that is the amount of profits or the points we are going to gain if the trade actually does reach our zone. And you take note, I'm always trying to make this analysis more of a swing trader, because the kind of life I live is a very busy life. Sometimes I don't even have time to keep watching the markets, but I needed a strategy that could help me, like, to incorporate my lifestyle into the markets. And I found out that this system works relatively very good for me, because you require less time to analyze, and then you just keep monitoring once, maybe once in a few hours, and then maybe once a day, or maybe sometimes it can go up to a week. So let's go ahead and calculate what we are going to gain from this trade. So targeting this block down here, it is 5,200. Let's use 5,200 and divided by, remember, we had risked 877. So that will give us an ROI of 5.9. That means if you risk 1%, you're going to make 5.9%. So that's basically how you go about setting targets and then setting your risk limit or your stop loss, and to know how much you're risking. Let me just go ahead and delete this and actually put a buy, because we want, this is going to be our take profit right here. Or maybe let me use another one. Let me use another sign. Check here, what sign can I use? Let me use this one again. So this is going to be our take profit. So that is example number 1. I'm going to look for example number 2 and then go through the process all over again. We are going to start with a blank chart, and then from there we shall continue.